All right. Hi, everyone. I know this is a much anticipated bottom line live because we're going to talk all about tax deductions. This is a question that I get asked about all the time, every day. Do you have a list of tax deductions? What are tax deductions? Can I deduct this? Can I write it off? I don't know how many of you guys have seen Schitt's Creek or even just the meme from Schitt's Creek, like, but I'm writing it off. Okay, but someone has to pay for it. What do you mean? I'm writing it off, right? So this is much talked about, much anticipated. And I'm going to share this in the group real fast in the wealth dynamics, because this is for you guys, definitely. And then we're going to get into this, and I'm going to talk about tax deductions like in speed mode, because I only have a half an hour. So I did a little bit of extra research for this. So I even have some definitions, because the first thing that you have to know when you're talking about tax deductions is what is the general definition? Like, what is generally a tax deduction for business, right? And we're mostly going to talk about business. I might touch on personal deductions a little bit, but we're mostly talking about business. So first of all, they have to be ordinary and usual and necessary tax deductions, or necessary expenses, business expenses. So what does that mean? So ordinary means that it's common and accepted in the general industry in which the business owner is working. So construction companies buy building supplies, that's ordinary. Marketing companies buy marketing, that's ordinary, right? Obviously, there's lots of examples. I'm just being very broad here, and we'll get more detailed. Necessary, what does necessary mean? It means it is appropriate and required or helpful in operating your business. So that's what's necessary, something that you need for your business. It's kind of like, you know, when your kid wants pancakes for breakfast, like that's not necessary, but they could have pancakes for breakfast, or they could have eggs, or they could have cornflakes. What's the necessary and what's just something that you want. Okay, another thing that I know Jerry and I have gone over several times is, what is your intention? What is the purpose of this expense? Like, okay, let's say you're going to the Bahamas for a convention of dentists, and you're going there with a bunch of other dentists, and that's why you're there. Okay, that's a business trip, very clearly. You're going there for a dentist convention and you're a dentist. But let's say you're going to the Bahamas with your family and you say, well, we're going to talk about business at the hotel with my wife while we're there, so I'm going to call it a business trip. Is that ordinary? Is that necessary business expense? Was your intention for that to be a business trip? No. So that's where you really have to keep it upon yourself to, you know, have your own ethics, have your own integrity on these things. Just because you went somewhere and talked about business, you have to determine, is that still, what was your intention? Was it a business purpose? The other thing is that it has to be documented. You have to have receipts. You have to show, you know, invoices. You have to show proof that it was business expense. If you do go for business meals, things like that, you definitely need to write on there what the business meal was for. Like, was it a sales meeting with a prospect? Was it a meeting with a client? Was it a meeting with all of your employees? Like, you have to write on the receipt what it was for. So if you ever had to prove it to the IRS or in court, you would be able to do that. The next thing is that not only do you have to document it, and it has to be for a business purpose, it has to be something that's allowable by the IRS. So for instance, when you buy clothes, and let's say I have, you know, clients that are influencers, or they are business executives or actors, and they assume that when they buy clothes for a big event, that it would be deductible because they're only going to use it for that event. But the IRS won't agree with you. If you ever were to get audited, they would say, no, you could wear that dress to some other event. You could wear that suit to another event. There's ways to get around these things. Like, let's say you put your logo on the, the piece of clothing. Now it can be marketing, things like that. So there are ways to be able to do it. But keep in mind that just because you buy a suit for a business meeting doesn't mean that the IRS is going to make it allowable as a deduction. Okay, so those are the main points. Now I'm going to go into some examples, and I'm just going to like rapid fire list off examples of what could be business deductions. Are you guys excited about this? Let me look at my promo actually and see if I should go through this first because Jerry made me an awesome promo for it. So we've got, okay, yeah, so these are really good points. So I could start here. Startup and organizational costs. Let's say before you even make any money, you have to buy equipment or you have to invest in something. Those are all going to be deductible in different ways. You're going to have to work with your CPA because some of them are going to be assets and they're not all necessarily going to be deductible as expenses in that first year, but they will be deductible in some way. So keep track of that, even if you don't even officially have a business yet, but you're working towards it. Even if you, are gathering the equipment in your basement until you can rent an office space or something like that. Those are all still business expenses for starting your business. So keep track of all of those. Okay, good. So inventory, obviously you keep track of that. If, I mostly work with service-based industries, so we don't do a lot of inventory, but if you own a product-based company, you keep track of your inventory, whether you're doing it yourself or whether you have a fulfillment house that tracks it for you. Make sure you have those numbers. You give those to CPA at the end of the year. Those are all obviously very obvious business expenses. Utilities, great example. Insurance, business and property rent, all of these. Okay, the rest of these are pretty simple. So I'm just going to start going through my list with lots of examples. Okay, so here's one. Every company does advertising. And if anybody has any questions, feel free to write it, whether you're in my Zoom group or whether you're watching this on Facebook Live or you're watching it later. Ask me questions. I will get back to you if you're not watching it live. If you're watching it live, ask them now and I will answer. Okay, so advertising. These expenses are encouraged to promote a business, such as newspaper ads, flyers, and the cost of distributing them, television, radio promotions, and business cards. Let me give you even more examples. Newspaper ads, flyers, sponsorships. Let's say you sponsor your school's little league team or your kid's school's little league team, and they, then they put your logo on their little newsletter. That's advertising. Business cards, postcards if you send those out, logo design for making your new logo, anything you do on social media, Google ads, Facebook ads, podcast promotion, wrapping your vehicle, in advertising, that would be an advertising expense. Billboards, commercials, ads on a bus or a subway, your website, content creation, email marketing, influencer marketing. You hire, an influencer to show off your cool products. That's all expenses that are business expenses. Sponsoring an event, swag, such as giving out, your logo on pens, paper, flasks, whatever, all of that. Trade shows, exhibits, prizes for contests. Political things are not deductible. This is what my research shows, but not as a business expense. So all of these things, all this list of examples that I just gave you guys are all deductible, and that's just on advertising. Okay, let's go to the next thing. Let's say commissions. Let's say you're paying someone to do sales for you or referrals. Commissions paid to any salesperson, any referral. Those are all it. Anybody, contract labor, anybody that you're paying to do services for you. So contractors, freelancers, all of that, all counts. Obviously payroll, employees, bonuses, all of that is tax deductions for you. Okay, employee benefit programs. Contributions to an employee benefit program include education, recreation, health, and welfare programs. You have to actually create those programs. You can't just do those things without creating a program because it has to be something that all employees have access to, and there's certain rules, but all of those things are deductible. If you set up life insurance for your employees, not if you have a sacred account, for yourself, that is never a business expense. It's a personal expense. It's not a business deduction. But if you were to purchase life insurance or sacred accounts for your employees, where they're the beneficiary, but you own the cash that you put in, that is something that's deductible. Also, health insurance for your employees, all those things. Okay, gifts. So it's deductible up to a maximum of $25 per customer per year. So gift cards to restaurants, flowers, baskets, anything like that. Obviously, there's also certain things that can also be marketing or promotion if they have your logo and swag, so keep that in mind. Insurance, deductibles including fire, theft, flood, merchant inventory, liability insurance, workers' comp, business interruptions, errors and omissions, disability for employees, malpractice, health, dental, vision, that's all tax deductible. Do I have any questions yet? I think I'm just giving you guys a giant list of tax deductions. But like I said, if anybody has any questions, feel free to ask, or else I'm going to keep going. Okay, interest expense. This is something that people don't think about very often. So let's say you have a business loan or a business line of credit. So obviously the payments onto the business loan are not deductible because the expenses you used the line of credit money for is deductible, but all of your interest that you paid on that is all deductible. So if you're paying 10% interest, it's all deductible. If you pay all the interest up front, it's all deductible. Keep that in mind on your credit card, mortgage for a business building, all of that stuff. Legal and professional, so attorneys, accountants, tax preparation, architects, marketing companies, your bookkeepers, your friendly neighborhood bookkeepers, that is all legal and professional service expense. That's all tax deductible. Okay, office expenses, so anything that you need for your office. We're not talking about equipment, if it's expensive, if it's more than a few $1,000s, depending on your CPA, but the IRS says anything over $5,000 becomes an asset and it's not an expense. But guys, like everything, pens, paper, receipt books. I don't know who has receipt books anymore, but supplies for equipment, computers, copiers. Okay, no, not the actual copier that's so expensive. Computers are only like $1,000 these days, so those are office expenses. But cameras, internet hosting, postage, video equipment, software, all of that can be a business expense. Your rent and lease. So obviously for your company, any rent or lease, including for your office, your storage, your post office box, your virtual office, all of that is rent and lease. Repairs and maintenance for your office. And also, guys, if you have a home office and you are making repairs on your home office, and when I say home office, I literally mean the office in your home, not your entire home. But let's say you had your entire home painted, then you would get whatever the square footage is that you take for your home office expense, your deduction, you would get that as well on that painting because your office paid for part of it. But let's say you had something fixed inside your office, that would be specifically that. You had a carpet installed just in your office, that would be repairs and maintenance. Okay, or rather, new carpet, whatever. Not capital expenses, but repairs. Okay, so you can have, okay, so here's a note. It's important to distinguish between repair expenses and improvement expenses because an improvement must be depreciated. So that's what I was talking about. It's a capital expenditure. If it raises the value of the asset or the productivity of the asset or prolongs the asset's life, et cetera, then that becomes a capital expenditure and not repairs and maintenance. So we're talking about small repairs and maintenance. Forget painting the house, that's probably a capital expense. So small repairs and maintenance, right? Things that are necessary to maintain property in an ordinary efficient operating condition. You get a leak fixed, you get your carpet fixed, you get your tiles fixed, you get, those kinds of things. Okay, example, labor, supplies, costs of contractors, cleaning, janitorial. All right, good. Nobody has questions yet. Good, because everyone's just taking notes. All right, so supplies, any supply items that's necessary to your business. Could be Gift wrapping, materials, like let's say you have a product-based businesses, you're mailing stuff out to people. Materials, it could be cleaning or maintenance supplies, security system, computer or tech supplies. So those are all tax deductible. Taxes and licenses. Okay, so taxes or licenses that are directly related to your business. So this is something that people ask me about and gets confusing. Let's say you are an owner of an S corporation and you're paying your taxes. Those are actually personal taxes because an S corporation is pass-through income. So when you get your tax bill from your CPA, it's in your name. It's not in your company's name. There are certain states, like for instance, California, you're always going to pay the franchise tax board. It's $800 or whatever it is. That is definitely a business expense. But let's say you get a tax bill, $10,000, whatever it is, and you're an S corporation owner. You think that because it's based on the profit of your business, that is a business expense, but it's actually a personal expense. So if you have your business pay for it, it's just going to be a distribution to owner. So keep that in mind. It's never going to be a business expense if you're an S corporation owner. If you're a C corporation, that's different. If you are because they're taxed differently, C corps. If you are a sole proprietor, it's still basically personal taxes because it's passed through onto your own personal tax return. You don't have a separate tax return if you are a sole proprietor. Or an LLC that's taxed as a sole proprietor. Unless you're an LLC elected to be taxed as an S corp, you are only getting basically, if you are an LLC that's not elected to be taxed as an S corp or a C corp, you are getting taxed as a sole proprietor, unless you're or a partnership, but it's going on your Schedule C on your personal taxes. So that one doesn't matter. You can put it in there. You know, your CPA will know what to do with it, but it's not a business expense. It's only taxes are only business expense on a C corporation that doesn't have the pass-through taxation, and the C corporation will pay taxes, and then the owner will pay taxes as well if you end up paying more taxes, but it is deductible on the business side. So keep that in mind, only business taxes, not the S corporation taxes. Okay, what else do we have on this list? Okay, but let's say you have to go get a license because you need a liquor license, or you need an occupational license, or a chauffeur license, or a building license, or any kind of license that you pay to a government or other body for your company is all tax deductible. So state taxes, you know, payroll tax, which we're going to talk about a little bit more, personal property tax on business items. I know you sometimes have to pay property tax, believe it or not, on big like pieces of equipment. I've seen people have to pay property tax on giant copiers because back in the day, I haven't seen any of these giant copiers in a while, but when you work in a big office, they have a giant copier, they have to pay property taxes on it. So it is what it is. Sales tax on business items, all those things are tax deductible if they're related to the business. If you pay property tax on your home and you have a home office, again, you would get the square footage of whatever your home office is how much your tax deduction would be on that. Okay, payroll taxes. So any employment taxes that a business owner pays for their employees, or either the employee taxes or the employer taxes, are all tax deductible. So you've got your Social Security tax, you've got your Medicare, you've got your federal unemployment, you've got state unemployment, which varies by state. We've got all different ones. I have numbers on here, but I'm not going to even say them because they change. Okay, travel. Here's one that we brought up earlier. Your travel business expenses are expenses incurred while you or your employees are away from home on business, and so that says they may be deductible. An individual is away from home if he or she is required to be away from his or her tax home substantially longer than for an ordinary day's work, and he or she needs to get sleep or rest or meet the demands of the work while away from home. The tax home is the entire city or general area in which an individual regularly works, no matter where he or she lives. So let's say you work in Tampa and you have to go to Orlando. That is not in the general vicinity. Let's say you have to stay there overnight, you have to pay for a hotel, that's a travel expense. Let's say you have to fly to another state, another country, that's for business expense, business purposes, guys. That becomes a travel business expense. Any food that you buy while you're traveling for business purposes are a business expense. So again, let's make you guys a list here. Airplane, train, bus, car, local transportation. I already said bus. Taxi, limo, Uber, Lyft, car rental, baggage, shipping of supplies or display materials, lodging, hotel, Airbnb, tips while traveling, cleaning, laundry, telephone, fax. Who uses a fax anymore? Parking and tolls. Those are all travel expenses if they are while you are traveling for business purposes. Okay, let's talk about meals. Let's talk about meals. So a lot of times people will have on their books meals and entertainment. So meals are deductible. Entertainment has no longer been deductible since 2018, but the meals around the entertainment can be expensed. So let's say you go play golf with a potential client. The golf is not deductible, but let's say you buy them lunch while you're out playing golf or after you finish or before, whatever, the lunch is deductible. Keep that in mind. So dining with other people for business purposes is 50% deductible. If you are traveling, it's 50% deductible. If you have food in the office, it's 50% deductible. If you have an office, company party, picnic, outing, etc., more than 50% non-owners, it's 100% deductible. So, and then keep this in mind, for 2021 and 2022, you can deduct 100% of food and beverage expenses from restaurants, because obviously the government's trying to stimulate economy in restaurants after the pandemic. So we don't have a recession, so the restaurants can stay in business. So take advantage of that, go out to restaurants, and it's 100% deductible right now. All right. So examples: meeting with current or potential clients, meeting with employees, employee meals, hosted meetings, such as like networking meetings, year-end parties, food and drinks at golf outings. Wow, look at, I said that one already. Team building, recreational events, meal at country club with clients, cafeteria or office, meal cooked in a hotel room. So lots of ways of meals. But again, write on the receipts, because if the IRS ever wanted to see it, you have to be able to prove that it was for a business purpose. And honestly, in 3 months, you're not going to remember. So in 5 years, you'll probably not remember at all. So just write it down. Okay, utilities. So we've got, so utility deductions for business property. So if you own an office, if you have a home office, it's going to be that portion again, like we talked about, that's deductible. But if you have an actual office building, whether you own it or rent it, your electricity, your gas, telephone, water, sewage, garbage, and internet is all considered utilities. If you have a home office, then obviously it would be split by your square footage amount. Okay, so payroll. We talked about payroll. This is also something to keep in mind. If you're a business owner for a small business and you put your children on payroll, your spouse on payroll, those are tax deductible. So if you want to get into that, that's tax planning. We actually have a webinar next week with Tax Hive where we're going to talk about some of this tax planning stuff. Reach out to Tax Hive or Jerry or me if you want us to hook you up with Tax Hive, and that's all tax planning. But you can, there's a way to put your children on payroll and your spouse on payroll. So keep that in mind. All right. All right, so we talked about startup expenses already, and I know, look, I've been talking so fast. I'm not anywhere through my list, and we still have more to go. And I'm talking fast, guys. I talk fast, but this is a lot of information. Okay, so bad debts. This is something I get asked about a lot. Can I write it off as bad debt? Can I write it off as loss? So here's the thing, guys. There's two different ways to do bookkeeping and taxes. One is cash, one is accrual. We've talked about the difference before. I'll touch on it a little bit. If you're doing cash basis accounting or cash basis bookkeeping and taxes, you're tracking money in and out. Most small businesses in the United States use the cash basis. Therefore, if you invoice a client and they don't pay you, you don't get to write it off because you're only counting what got paid. If you had expenses on it, then you get to take those. But if you're doing accrual, where you basically get taxed as soon as you invoice a client and you get deductions as soon as you enter a bill, then if you already have been taxed on it and they don't pay, that's where you get the bad debt deductions. But if you're doing cash accounting, which I'm telling you guys, at least 85% of all companies in the US are probably doing cash accounting because we're mostly small businesses, you don't get any bad debt deductions. Keep that in mind. All right, startup expenses. So we talked about this a little bit. Let me see if I have any more examples of this. Oh, here, as part of the Jobs Creation Act, taxpayers can deduct up to $5,000 of startup costs and $5,000 of organizational expenses incurred in the first year of their small business. Startup expenses are the costs the business owner has for setting up an active trade or business. Okay, good. And then if it's more than that, then they can even be, like I said, like dragged over a long period of time. But either way, you get to take the expense, the write-off. You get the write-off. Okay, so here's examples. Survey of potential markets, analysis of available facilities, labor supplies, etc., advertisements for opening the business, salaries and wages for trainee employees and their instructor, travel and other necessary costs for securing prospective distributor, supplier, customers, fees for executives and consultants, and other professional services. Okay, good. So note, startup expenses do not include deductible interest, taxes, or research and experimental costs. Expenses not deducted within the first year can be stretched out over a 15-year period. Your CPA will help you with that. Ooh, okay, I still have more to go, guys, but I'm running out of time. Let me do a couple more of these, and then you guys can watch this as many times as you want. Okay, so you've got automobile expenses. This is something I get asked about all the time. A business owner who uses his or her automobile or reimburses an employee for using an automobile has two methods of claiming car and truck expenses. The two methods are either actual expenses or the optional method. The actual expenses is a business owner who uses the actual expense method will claim the business portion of the actual expenses paid. So it's the actual cost of gas, oil, insurance, tires, licenses, repairs, garage, rent, cleaning. The car is rented, the lease or rent amount can also be a tax deduction within limits. You have to check with your CPA, there's rules. If the business owner owns the car, he or she may claim a depreciation tax deduction, meaning stretched out over years, right? Then there's the optional method, which is the standard mileage rate. So business owners who own or lease their cars and don't operate a fleet of vehicles for their business are eligible for this method. The standard rate for 2021 is 56 cents a mile. I have to check what 2022 is. It's probably right around there. Business owners should take this into account when calculating their income and expenses or paying the expenses of employees. So you can reimburse your employees at that. You can also deduct your business miles at that. Keep track of your mileage. It is important to keep track of your mileage. You can actually use the QuickBooks app to keep track of your mileage. The standard mileage rate is considered to cover most of the ordinary expenses listed in the actual method. However, certain expenses may be claimed using either method. These expenses include parking fees and tolls, business use percentage of the finance charge per vehicle, and the business use percentage of property taxes on the vehicle. Okay, so I talked a lot really fast and told you guys a lot about business deductions. You can literally watch this video as many times as you want. I don't think I can talk faster than this. There's a few more. And some of these guys, you're going to have to talk to your CPA and make sure you're doing it right. Just because I said that it's a business expense, there are still rules that apply to each one, including keeping track of the receipts, having a business purpose for it. You have to keep track of your mileage, all those things, right? So there's more to it than just knowing what's deductible, but you can start with knowing what's deductible and go from there. Okay, so if anybody has any other questions for me, feel free to reach out. You can comment on this video. You can message me on Facebook. You can email me, maya@solvencynow.com. You can go to my website, solvencynow.com, I'm on Facebook under Maya Weinreb or under Solvency Now. I'm on LinkedIn under Maya Weinreb. I'm on Instagram under Solvency Now, Bookkeeping. So I'm very easy to find. If there's any questions or anything I can help you guys with, please let me know. I'm here to help. And thank you so much for being here. Thank you for watching all of my exciting news on business deductions. And I'll see you next week. Actually, a different time. We're doing a little earlier in the day because we have a special guest with Tax Hive. We're going to talk about tax planning with Jerry and Tax Hive and me. All right. I'll see you guys next week. Thank you so much. Bye-bye.